All right. Good morning, guys. Today is the 26th, tradingology.com. Welcome to the trading room. Kyle, Sham, and Mark so far. Hey, guys. How are we doing this fine morning? Very cool, very cool. Just obviously half an hour after the open, just watching here. We'll let people trickle in. We had the reversal from yesterday. I shouldn't say reversal, but just a large up day after the large down day. So we'll see where today goes. We're starting out weak. YM is just a little bit right around negative 0.05, 0.5% down on the NQs, 0.2 down on the ES, and 0.3 down on the RTY for the Russell. And I'm sure, did you guys see it all? Hey, the swing trade videos I posted earlier. Good morning, Dave.
Good morning.
How are we doing this fine Thursday?
Good. I got my third cup of coffee ahead of time today.
Nice. I'm about 2/3 down, so hopefully I don't have to run away too quick.
Yes. Yeah, when you're out of coffee, man, it's a tough morning, especially in upstate New York. It is cold and rainy, and the only thing that helps is a hot cup of coffee.
There you go. Yeah, the guys are just rolling in. Sham's got a request on the weekly, so we'll definitely cover that based on the swing trade videos I had posted earlier and one that I'm currently in right now.
Okay. Awesome.
And we had a lot of conflicts in the vol arb this morning, so.
Yeah, yesterday's pretty sharp move kind of threw everything off in the spreadsheet. So.
Yeah, and those 2 days in a row, if you're looking at the 4-hour charts, I'll swing it over here.
Yeah.
Yeah, we had that massive over 1% on the entire day, 0.89 on the 4-hour there. So I was talking to one of my clients last night after we were doing a session. He's like, yeah, after I saw that, I'm like, I know it's going to come back. He's like, yep, you're getting a good feel for it.
Yeah, and today, the market is going to go down, so the spread's going higher, it looks like. And
yeah.
That was kind of easy to predict after the open, though. But I think the market is, boy, I tell you, I don't know if you saw the post I made this morning to Twitter.
I did not see anything this morning yet.
All right. Why don't you go ahead and kind of get into the trade here, and then we can talk about some news. It's pretty darn interesting.
Yeah, so we covered anybody take vol arb trade this morning. We got a few guys in here.
Morning, Asham.
So looking at how it was setting up, we got, we'll just cover quickly the TSA that came out for today. And if anybody's not signed up, you can register and get these. Just contact me at support at tradingology.com, and I'll give you these. Here's the one that we had for this morning. Oh, that's 25th.
That was yesterday, yeah.
Let me grab the other one. Dun, 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 dun. Did I not paste it? 1 second. I got it right over here. I could have sworn I pasted it somewhere. Oh, I know where I pasted it. All right. There we go. Copy. Here's today. So we'll put it up here. I'll bring the spreadsheet over. What we're looking at. So we start out obviously with where are we at on the bell curve? That's where we always ask ourselves. And like Dave just said, if you didn't catch it, we went from a 5 to a 1, definitely a hard landing. We like seeing the closer moves, 5 to 4, 3, or 2 or whatever if we're going to be coming down. But the big spike the day before, then coming back down. So that's what we saw there on the bell curve. Binary trend, we did get the first one in the 0, but we are still full in after a day of a full boat. So that is still an up bias on the binary trend. If we start seeing it build out, then we'll start building out to be negative like it was previously, and we started out turning negative. but as of this morning, it was up on that. Cross column, no bias there we had. 727, we'll see if that holds, if it continues back up, which it is currently right now with the market falling, as Dave also noted. And OBOS, down bias there, coming down from a 12 to an 8. So then we go to the charts, and as we saw in the 4-hour, that's where we have a upslope overnight, taking into account those last two candles. Nice small bars, we like that better. But so that gives us a down bias is what is normally seen when we see that setup. So that's why we had a down bias on the 4-hour. So we got down, up, no, down, down, and the M1, the 1 minute, was almost flat, but just slightly upslope. So we got it down potentially around the open. So as you see here, lots of conflicts, and not looking for a good trade there. Maybe just if we see something line up on the EMAs, then you might give you a trigger in, but definitely wasn't a good lineup right around the market open there. And as we see the EMAs, let's go that guy back.
Yep, exactly.
Not looking like it, we got a reversal starting to happen, but it's not clean. So that's why I was curious if anybody took one. Looks like Asham took a long in the VA, very nice, quick profit. Using the EMAs, I want to hear how you did that, sir, since we had it completely upside down. Teach me, Obi-Wan. Excuse me, I'm losing my voice suddenly. Good job using the micros. I always, that is also what I'm doing on my swing trade, just so I can sleep better at night, as it's nicely moving more in profits today. That's what I do have on these red lines, but we'll cover that in a bit. But that's kind of the VA trade overall. In the setup for the day.
I recommended that. I recommended the new micro E-minis to a private client yesterday. I don't know if you remember Danny from last year, but he had to stop after 2 sessions back in December of last year, and he just contacted me to complete his other 2 sessions. So we had one yesterday.
Very nice.
Yeah, and he wasn't aware of the micro E-minis when they came out over the summer, so I let him in on that, and he's going to start trading those. So that's really a huge innovation for retail traders, I think.
Definitely, yeah. It really opens the game. Lower requirements just to start the account, lower margins, lower risk, lower leverage, everything.
Yeah, for swing trades, it's great.
Yeah, so watching the 1 minute of Sham, I'm guessing if you got in around the open, did you exit around 10 minutes or so in? Nice, decent profit there.
Hey, Andrew, good morning. I got your text. I will definitely check it out. Thank you, Andrew.
Andrew, hey, how's it going, buddy? I've been meaning to put an email together for you too, so I keep getting too busy, so sorry about that.
Yeah, Andrew, I'm sorry. I think you sent me a text yesterday too, and I just I was out of pocket yesterday, as they say in Spycraft.
Yeah, so those that saw, if they haven't, they're up there obviously. When we got the weekly signals, if we want to touch on that quick. When the week started, I came in and I saw, it's not so much when I see them, Sham, is like I'm not looking at, hey, this on the 16th. So this didn't actually appear back on 9/16 because I don't believe I saw it last week. So it's not like this showed up 10 days ago and I'm just seeing it now. These do appear when the setups do cover it with the signals. And Andrew, if you can explain it any better, or Dave, I'm sure you can too, since we have the makers here. And I just use it for leveraging the traders. When we're above the cloud on the weekly and that guy pops up, that was a trend that we're moving down, just like we had the trend moving up. And a few weeks later, it trailed up on the greens. So that's why you saw, or you may have saw, if you didn't, you can watch them on the YouTube, is entered the swing trade. This box just keeps playing with me. Holy cow.
You like to jump around, yeah.
I don't know why that one jumps on me so much. So we're up 75 on the trade today, or overall, 150 on the day itself. This one's been open for a few days now, so I'm just being patient with it, where it did go negative yesterday, but looking at that long-term trend, I stayed with it, and now it's back paying off. So that's what I have in here is some target lines. If I start crossing these red lines, I'll look at taking profits off.
Yeah. So as far as the signals goes, those are trend confirmation signals. So you may not see them for the until the trend has been confirmed. So in most cases, what I do is I use the SM price signals to kind of give me an idea if we're going negative or positive, and I use those. Then once I'm in the trade, if I see the down arrow on the swing signals, that's an indication to me that I'm on the right side of the trade, and I can hang in there a little bit longer. If I don't see it and I'm in the trade, then I have to kind of watch it a little more carefully. So just remember that those swing signals are not going to print until, because they're on the weekly chart. They may not print for the entire week, for the next week, and they're not technically trade signals. They are trend signals, and so you're just getting confirmation of the trend. Really, I would not use them alone to trade. But if you are in a trade and you see, for example, oh, you got 10 minutes on all of those. But if you do say you do a weekly on one of those charts with the SM price signals on it, and I would actually put those together. I would put the SM swing signal and the price signals on the same chart, and just add it in there. And then what I would do is I would trade off the price signals chart, and then use the swing signal as a confirmation that, hey, yeah, I'm on the right side of the trade and I could probably hang in there for a while. Yeah, so you see the downturn kind of, you still have an up arrow on the price signals, right?
Yep.
And so that is the last signal that was given, and that is also on the weekly. And you want to watch the green bars. If you got green bars are increasing, then that's a good sign that the price is going to continue. When you have a downturn in those bars, that's an indication that we're going to see a little bit of a pullback. And so far this week, we're actually up on the green signal bar. So this decline may not last. If it accelerates, you'll see that price signal bar decline because you're still in a weekly. So it's not going to close until Friday.
Right. That could be way down here.
Now, if you're doing if this is only for swing trading, so you got a down signal, and you've got a price that's actually pretty close to the old high. It's not very far away from it, is it? I mean,
no, not at all.
Actually, just from 3 weeks ago. So you're on the weekly. So if you go with that one, yeah. That's pretty close. It's only a couple hundred points away.
Yep, about 400.
Yeah. So remember, if you're on a weekly, your time frames are very, very different than if you're trading on the 4-hour or the daily. But right now, everything still looks green, at least on the price signals, even though you have a down arrow. So you have to wait for confirmation. Personally, I wait for confirmation for both. I want to see a decline in the price signal bar and a down signal on the swing signal.
Well, further adjustments are in line, so we're always improving.
Yep. And then you want to, if you want to dive into the 10-minute, you want to kind of pick your spots.
Right. Look for all optimum entries and exits.
Right. I wouldn't trade just off of one time frame. If I'm doing a swing trade, I'm going to dive down into, and typically what I'll do, like for example, I have MGI up here, which I've been trading. I got out at around just over $6, $6.25, $6.30, and now it's pulled back into a buy range that I had set up between 412 and 460, 470. And it's in that range yesterday, and I started doing some nibbling, so I've got it on a 4-hour, a 1-day, and a weekly, and I've got the price signals on each one. So and they're all in the same window. So I've got one of those flexible charts up with three. In fact, you can maybe switch over to me and I'll show them real quick here.
Sure.
Oops. Wrong button. There we go. Yeah, so I got these. So this is how I set up. If I'm going to do a trade on any particular instrument, I'm going to be looking at the 4-hour, the daily, and the weekly. And so I'm watching each one of the signals with the price signals on there, and the in each one of these time frames. So I'm looking at all time frames. I don't, and then if I want to, I can go down into a 10-minute, but with MGI, it doesn't move that much. So well, I mean, it moves, but it doesn't move on a minute by minute basis. So I will pick my uh, prices in order to, based on my range. So I'll get in, like yesterday, dipped just below my range a little bit, took a little bit of a nibble here, got a little nibble this morning, and it's starting to move a little bit higher. So I've got the Renko on there, I've got the SM price signals. And that's basically how I set it up. So I got 3 time frames, and it works pretty well for me. I do this for almost every instrument that I'm trading on a swing trade basis. This is for swing trading.
And what did you do to identify your buy range there? I see you have a little the channel.
Yep. So my buy range is pretty simple. I'm looking for previous areas of consolidation. So in this case, let me just zoom out here. It's this consolidation over here. That previous consolidation before that, I don't have it further back. Let me adjust this. Whoops, lost you. How did I lose you? Oh, there we go. I just want to go to time axis. So what I do is I'm looking for previous areas of consolidation, and this is the last area of consolidation before we hit these lows, and that's the area that I want to buy in, because typically the consolidation area is a pretty good spot, and it's also just below or just above this previous high. This was when MoneyGram made the announcement and Ripple made the announcement that they were going to purchase, inject about $50 million into MoneyGram. And so that's when we got the price high. And you can see that high right there is almost perfectly aligned with this bottom. That is, so remember that previous resistance, this was resistance, price decline, broke through it, it's going to act as support on the way back down. Right there, almost perfect actually.
Yeah, for sure.
86. And it was also a previous area of consolidation. Those kind of that kind of technical analysis, consolidation areas, previous support and resistance areas, are probably one of the most reliable patterns I've seen as far as trading stocks go. Patterns such as flag patterns and things like that, head and shoulders patterns, typically don't work anymore. So I don't use them, but I do use areas of consolidation and previous support and resistance.
And more with an individual stock, like you're saying, than other instruments, I would assume.
Yes. Yep. Absolutely. So I started buying MoneyGram right around the 230 area, dipped down to 133, added to the position, and then had a nice run up here to my target range was between $6 and $7. And that, can't remember why I had that. Let me just check here. I think that was also a previous, yes. Well, that was right in that consolidation range. So the top end of that consolidation range was my target to get out. And so that was the area, this was my sell area. And then I'm coming back in here to the other it's easier to see on the daily, but that's also the consolidation area that I just showed you. Yeah, it's pretty simple, pretty simple. It doesn't take a lot of brain power to look at those consolidation areas. And those are typically really good spots to sell and to buy. All right, back over to you.
Right on. Looks like we had something come in there. Asham learned a bunch from you. All right, cool. You're welcome, Asham. Good to hear it.
Good. All right, here's some interesting news, guys. Unless anybody has any questions on that, I'll put this link in here so you can pull it up if you can. Any questions on what we're doing, especially with I've gotten into more. I'm still doing futures trading, the VA trade. Every time I get a chance to, I do it. But I'm getting into. I'm starting to bite on some of these really beaten up stocks over the last. If they've been beaten up over the past year, I'm starting to look at those. MGI is one of them. All right, so this one is interesting, guys. This is really interesting. We talked Tuesday about the impact that shortage of cash is having on banks. Well, this may be one of the reasons why we're having a shortage of cash. If you scroll down on there, there's a really these are U.S. retail banking store closures, and this is a very, as you scroll up a little bit and see what they say, they have a little comment there. These charts are brutal.
Thanks, Barry.
Yeah, exactly. So
I'm
these
keeping
are
above. Just I'm watching my deals here, so if I step away for a minute,
oh
guys.
yeah. Okay, yeah, definitely watch it.
Yeah. So what we got here? Payless, Gymboree, Dress Barn. Can you guys see that, or is that too small?
Yeah, these are children's and women's stores. Charlotte Russe is a women's store. Family Dollar, which is crazy. Um, that's concerning because typically what will happen is they'll improve if we have in a recession. Family Dollar will do well in a recession, but the fact that they're closing, maybe it's just mismanagement. I don't know.
2,000 Payless stores.
Yeah, Payless.
How many do they have? Holy
Payless,
cow!
yeah, Payless is huge for footwear. They're just about in every single mall or strip mall. And
Things remembered. I got bit by that because I bought a watch for my father for his birthday this year. He's 75, and we had to go get something fixed. And I went back, and the store was gone. I was like, "What happened?"
what? Oh
Yeah,
my gosh!
somebody bought it, so it is back. But yeah, I was like, "Thanks a lot, guys."
Yeah, did you get the watch back?
Yeah, well, I did. We have the watch, but we were doing some work on the band, and my dad took
Oh,
apart part of the clasp that he wasn't supposed to, and it wouldn't go back together. So I'm like, I got to bring it to a jeweler. But yeah, suddenly it was like 2 weeks after I bought it, they were just the whole store was gone in the shopping mall.
yeah. Ours is gone too. There's a CBD oil salesman there now. Reminds me of snake oil salesman.
Right? Yeah,
But anyway, yeah,
Walgreens.
Walgreens
Walgreens
is
is
sold out.
huge.
I know they're huge, and they're closing 195 stores. That's crazy.
Wow.
Um, Charlotte Russe was in our mall. They closed, but you notice that almost all of the top ones are women's retailers,
Yeah,
basically.
apparel, clothing.
Yep, Charming Charlie. I haven't seen that one.
What's
Charlotte
the little
Russe, Dress
footnotes they
Barn,
have here? A star and a one.
Payless. Yeah.
Full chain liquidation and filed for bankruptcy is what the footnotes are.
Yeah. Right. Wow. So this goes back to our comment and discussion. Yeah, read that. That's good. Pace of retail bankruptcies in 2019 to date is accelerated compared to what we observed in late 2018. The 2018 holiday season failed to meet expectations, with December retail sales dropping 1.6% from the month prior, the weakest sales performance since December 2009.
Wow.
Last year's lackluster holiday season contributed 10 retailers filing for bankruptcy in 2019's first quarter alone, including Payless, Gymboree, and Charlotte Russe. The bankruptcies of just these three retailers led to the closure of roughly 3,700 stores. Several retailers also filed in July and August. Barney's, wow, Avenue stores. So that's pretty. It is astonishing, actually.
Right.
And this goes back to our comments and discussion that we had on Tuesday, where the banks are feeling the liquidity crunch at this point. And one of the reasons I believe is this: they had. I bet there's tons of loans out for Payless, Gymboree, Dress Barn. All of these companies now are not repaying those loans to the bank, right? That affects the cash flow of the banks. In addition, a lot of these stores had cash deposits, credit card merchant deposits on a daily basis. Those are gone. Think about that.
Yep, for sure.
Millions and millions of dollars that were flowing through the banks, with cash deposits and credit card settlements into those bank accounts held at the banks are now gone. And no wonder that the banks now are having a bit of a problem meeting their reserve requirements, because they had not planned for a lot of these to just kind of close their doors, and it's seriously affecting their cash flow. Yeah, that's why the rates went up to 10% overnight. Very, very scary stuff there.
I think I finally saw the first quote that said, "Hey, this might be a signal for, not good times." 2 weeks ago or 2 days ago, I was like, finally someone's saying just that it's not normal behavior, that they're saying, "Hey, we need to pay attention to this."
Absolutely. So what is causing these stores to close? Obviously it's the consumer, right? Consumer drives the economy. And evidently it's women at this point.
And it wouldn't surprise me is where we saw that Things Remembered store that closed here, that's in a mall. And the mall is almost like a ghost town. There's so many empty places that, just the nature of online, right? People have talked about this for years, since, the behemoth of Amazon or any other things you can get online, where, shopping's changing. I think that's also leading to some of this. So, all these stores closing because people are buying the stuff online. Women's clothing, I don't know how much they might buy online, but they're good at returning stuff too. So,
yeah. And I think there's some things that, obviously online is just absolutely huge. And it's been taking market share away from the retail stores for a very long time. But how do you try stuff on? It's really a lot more convenient, I think, for women. And I can't speak for women, but I'm just trying to think of, how this goes. But
oh, for sure.
You go out and you try on clothes, and I think women like to do that. It's a shopping experience for women. For sure, it's an experience, and for men, and they just buy stuff they want, so they don't care.
Right, exactly.
They just go buy, and women shop. And the fact that they are closing now, especially footwear, I think footwear would be very difficult to buy online unless you know your exact size.
And so many of them are different, right? Like like jeans or different sweaters. You get, large means one thing to one company, and another company it's not.
That's exactly right. And even in footwear, it's very difficult to tell. I'm between a 9.5 and a 10, depending on how the the shoe is constructed. So yeah, it's tough. But this is. I would keep a very, very close eye on this, and I would also keep a close eye on the number of bank closures. The link that we put in the chat from last week, or from Tuesday. Yeah, keep an eye on that as well. All right, guys, we got about a half an hour left. That's all the news I got for you today.
Oh, I saw another one. Looks like you posted about the recession outlook.
Yes, I did do 2 posts. What's that? I don't remember. Maybe you can bring that one up. I posted so many. Oh, yeah, the Guggenheim. Yeah, that was interesting too. That was pretty telling, is that they measured the impact of rate cuts on the recession from the 1990s to present. And they have a number of charts in there. And they did an analysis of the impact on the recession. And so what they found was that rate cuts had a more dramatic impact on a potential recession in the 1990s than later rate cuts did in like 2000 and 2008. It didn't seem to have as much of an impact. And they're thinking in this article is that, it's mixed. So for example, the 2 green ones there had a positive effect on the recession. It ended very, very quickly. The one in the 1990s, it had those impact of two nice green successful, the rate cuts were successful in that case. But then after that, in 2000 and 2008, the rate cuts didn't really help because we went right back into a recession after 2000. And then we went into a recession in 2008. And they think the same thing's going to happen. And you can see the gray area there in 2008 was longer than the one in 2000. And so that's the extent, that's the length of the recession at that time. The rate cuts didn't really matter. And they went they went to zero at that time.
Yep.
And so now they're thinking that the rate cuts are going to have even less of an impact as they're starting to do it now. Very, very interesting.
And it's interesting, this also shows the other article that we were talking about with the woman, I can't remember her name right now, that used to be part of the Fed, and how she was talking about how Janet was so slowly raising interest back.
Yeah.
That to back here, where they increased much faster over a similar period of time. So this should have been like this. Yep,
Danielle DiMartino Booth.
So that would have given them the additional room if they'd have been up between 4% and 5% at this time versus 2%.
Yeah, exactly. So that's another thing too, is that they weren't able to raise as quickly as they probably should have, realizing that if they did raise faster, they probably would have tanked the economy much sooner. And so they're all trying to have as little impact as possible to put the economy back into a recession. But now, it's just, I think it's inevitable. Unfortunately, I hope it doesn't get too bad. Now, I have done some deep dive research into payment systems that at least in the U.S. clearinghouse. I did a little bit of research into SEPA, which is the European payment system. The Federal Reserve, FedWire, and all of the infrastructure for those payment systems are just antiquated. They're just really, really slow, antiquated, requires a lot of human intervention and things like that. And one of the reasons why I like XRP and the XRP ledger so much is that it can be a layer for payment systems. Let me put a can I put like a image in this chat?
No, I don't believe so.
Okay, you're gonna have to switch back to me then. So this is from a report that Ripple did called A Deep Dive for Finance Professionals. Very interesting report. And it was actually done in 2014, and they name a number of companies at that time that they were working with, including Bank of America. And at that time, they were also looking at the payment structures of the ACH system in the United States, SWIFT, SEPA, the clearinghouse, and the Federal Reserve. And so what they were saying was that, hey, there's many layers, especially when it comes to the internet. There's messaging and formatting, there's network rules, then there's standards and governance, and governance, and then there's banks and applications that are consumer facing, like PayPal. And what they're doing is setting up the rails for a settlement infrastructure that runs underneath all of these different layers of the current payment system. And really, it's interesting that they actually, instead of putting no logo in here, they put the Federal Reserve System logo in here. And they say, well, corporate logos and graphics are but for illustrative purposes only. Yes, well, okay. We know that they were working with Bank of America actually very early on, because Bank of America was on their advisory committee all the way back to 2013. And this is from a document from 2014. So interesting that they kind of separate all of the, this is consumer facing and this is the settlement infrastructure. And their entire goal in with XRP and the XRP ledger and all of the software that they've created to enable cross-border payments and settlement for payments across the world is to create this settlement infrastructure which runs underneath all of the existing. So in this, they make the statement, if widely adopted, Ripple's peer-to-peer decentralized settlement infrastructure would replace the current settlement system for fund transfers. However, the other layers on the payment stack would be unchanged. So in other words, all of the messages, the network rules, the standards and the governance, and all of these other applications on top of the infrastructure would remain unchanged. And that they can continue to do, ACH, PayPal can continue to do everything that they are already doing, but now there's a new level that runs underneath it, which is basically internet. So based around the internet, which was not something that all of these payment systems could do previous to Ripple. They say that several networks of clubs of financial institutions may ultimately form on top of Ripple's common settlement protocol. For example, the clearinghouse that governs ACH networks in the US could create standard rules that allow for payment reversibility, compliance, dispute resolution, etc., between member banks on the network. The same can be true for SEPA region banks in Europe. So it doesn't have to change the existing infrastructure, which is nice. It's just basically another layer. Whoops, I want to do that. Let me get back into here. There's a number of screenshots. Let me see if I can pick a few out from this document that were really, really interesting, including this one. And we'll just touch on this one for a few minutes. But from a macroeconomic perspective, Ripple could increase the velocity of money, translating into greater economic activity. The velocity of money is the rate at which money flows from one transaction to another. As we have discussed throughout this report, banks and their customers typically need to wait several days to gain access to funds in cross-border transactions. In some cases, counterparties essentially replicate a real-time payment system via the extension of credit. And so this is kind of gets to the heart of what Ripple is really doing, because XRP has no counterparty risk to it. And banks and other financial institutions can hold XRP without that counterparty risk. So in other words, they are not holding funds as a fiduciary for someone else. So they go on and say, for example, the receiving bank in an international bank-to-bank funds transfer can access funds in real time if large financial institutions extend credit to the receiving bank, and that's the only way they can really do it. And those are the nostro-vostro accounts. Receiving banks can make those funds readily available to their end customers before the funds actually settle, usually in 5 to 7 days. This is sometimes known as a risk funds model. However, this introduces another layer of counterparty risk and cost into the system, which may not be the most efficient way of enabling real-time payments. With Ripple's technology, funds are fully settled in real time without the need to extend credit. That's a pretty big statement right there, because you don't need to trust the other party now to be able to trade with them. Because if you're giving credit to, if you're giving, basically the one bank is transferring money to another bank over borders, and these banks don't have a normal relationship with each other. And so they have to set up a credit system in order to do those transfers. But with the Ripple system in XRP, they can now do those transfers without even, as long as they know that the other entity is registered and compliant with the financial system in that country. They don't have to grant them credit. They have the normal kind of due diligence process of dealing with anyone else, but they don't have to extend them credit, so they don't have to do anything in order to exchange value with them, which is incredible. So in this case, the funds are known as good funds and are not based on credit. Receiving bank can then loan those funds back out to consumers or businesses, which then spend the money in the economy. So that's a huge thing, especially if we go into a recession. That's absolutely incredible. They can spend the money in the economy, and that's exactly what the Fed is worried about right now, because what they want to do is they want to lower interest rates in order to stimulate the economy. They know, based on that article we just read, about 7,300 banks or 7,300 retailers closing. That's withdrawal of liquidity out of the system, especially important for the banks. They need to somehow they need to stimulate the economy, and so now with using the XRPL and the ledger, we can now get the velocity of money. They can, if it moves faster, now people will have money to spend, improving the economy. This can greatly increase the velocity of money and have a positive impact in the overall economy without increasing counterparty risk. That's huge, especially when we are going into recession. And if you go back to that article again, from Guggenheim, or no, yeah, from which one was it? Yeah, will rate cuts be enough? The Guggenheim one. The question is, there's a chart down below there. Let's go down, keep scrolling down, further.
Which one you want?
Further. Keep going. This one, that one. What does, we mentioned the inverted yield curve several days ago. It's now 17 weeks. We've had an inverted yield curves for 17 weeks straight. That is even though a lot of people, I heard a couple of people say online who are investment advisors and that kind of stuff, saying that, oh, it's different this time. Inverted yield curve is no big deal. No, it's been calling recessions since the 1960s. And so it goes to my point that, is our rate cuts going to be enough this time? And rate cuts, whatever you guys think of it, rate cuts are still QE. They're still quantitative easing. Rate cuts, the same thing, whether they inject cash into the system, which they're doing already. But even if they're not, just the fact that they're cutting rates is an injection of liquidity into the system. And if you take a look at that chart, you can see how much lower we are. We are so low compared to 1998. We just, in the fact that we continue to cut rates here, we've got the swap rate is so far below zero.
Yeah.
I mean, in 1998, we just barely dipped below zero. Now we're way underwater. We're way underwater. And so the question is, can we get will the velocity of money, if we don't have the pipes ready to encourage, if we can't get that velocity of money into the system, if money is locked up, if money can't transfer, if money can't be injected as liquidity into the system, the Fed has no place to go. Even if they know, well, I don't know if they know or not, but they should know that even cutting rates at this point may not be enough to stimulate the economy.
And like we've seen, there's not enough room left anyways.
What's that?
There's not enough room left, right?
No, there isn't. Yeah. I mean, we're definitely going to go negative on the rates. I mean, if that's
right.
So, yeah. And that one down there, right there, their forecast is, so, I mean, it's almost inevitable that in the next 12 months, even 6 months, look at that. I mean, it's pretty close. We're getting to the point now where we're going to hit a recession. You can just take a look at that chart, and you can look at the previous recessions, the probability models there. Every time that line started those lines started moving up, you're going to have a recession. There's no doubt about it. And you can see, actually, if you look at the gray lines, you can see how thicker they've gotten.
Yeah, small, big, small, small, big.
Yeah, they've gotten thicker as time goes on. So what Ripple is doing, I believe, is setting up the infrastructure for these to create a velocity of money. And the reason why, when you hear Jay Clayton, when you hear Powell, when you hear all of these guys talking, they're not going to mention that.
Well, they did, so it would cause a panic, right?
That's their ace in the hole. It's their ace in the hole, and that's right. If they say, hey, look, okay, guys, we're going to set up a new payment settlement system that's going to be worldwide based on DLT. Yeah, that's panic. I mean, people will say, what the heck are you guys thinking? This is ridiculous.
They can't get to the ATM or the bank fast enough.
Yeah, exactly. They're going to start pulling out cash like crazy because they don't have confidence. They don't know what this new system is, and anything that's unknown is going to cause panic. So my belief is that they're trying to set up, and it's much, much larger than just RippleNet, because there's Ripple who's been working on this infrastructure. There's R3 that's been working on this infrastructure for corporations. There's SBI Japan that is already really setting up the rails in Japan, and they're way far ahead of us, I believe. Europe, the Bank of England has already set this up. It's been noted by Brad Carlinghouse, the president of Ripple, or I'm sorry, the CEO of Ripple, that the Bank of England is a customer of Ripple. They've been setting up in Europe and especially the Bank of England. Think about why the Bank of England would want to set this up much, much faster than the United States. It's Brexit.
Exactly.
This whole Brexit deal. They realize that, man, a lot of the velocity of money in Europe is going to be constrained with this whole Brexit deal thing. So it's going to be pretty crazy. Andrew says Swift GPI is trying to push through and beat XRP since they already have leverage with the banks. Who knows? Nah. Swift GPI is a messaging system. So that graphic that I showed you earlier, they're on top of they do not do settlement. Yep, there you go. Instant payments, but the instant payments that they have there, it says yes, but it's not instant settlement.
5 minutes to 24 hours. That's not instant to me.
Yeah, and that's actually not accurate. Settlement time is closer to 3 days. And especially in some of the more exotic corridors, it could take weeks. So it's a GPI. Swift GPI is a messaging system only. It still doesn't settle anything. So you have the counterparty risk again, and that's why the Nostro and Bostro accounts are still operating, because you have to extend credit to another bank, and the bank says, hey, we're sending you a payment, and the other bank says, okay, well, we'll credit the customer's account, but then they have to wait for that payment to come 3 to 5 days or so. So you still have that counterparty risk. A RippleNet, you don't have the counterparty risk. Also, Andrew, the who was it? Oh, right on the tip of my tongue. Oh, R3 Corda. Look up R3 Corda and the Bank of England. They did, or with Swift. Swift did a proof of concept trial basis with R3 Corda, Swift and R3 Corda. They've been trialing it, and I believe the resulting trial has been successful. And Swift just came out with a press release saying that they are now using R3 Corda, and the only So R3 Corda allows settlement with different instruments. So you can do the normal, yeah, there you go. So you can do the normal type of settlement that Swift has been doing, which is the credit-based system, Nostro Vostro, or they can use XRP for settlement. And the reason why banks would want to use XRP for settlement, or anyone on the Swift system, is because it's instantaneous and the settlement is instantaneous as well. So they don't have to wait for those payments. Yeah, so it says, so the proof of concept with R3. Now, the only digital asset on the R3 system is XRP. That's it. That's the only one right now. It's going to be a lot less expensive. Very, very, yeah, much less expensive. Yeah, they keep, if you go back to that article again from R3, they say that it's the first settlement mechanism, but and that was December 5th, 2018. It's been almost a year.
Yep.
It's still the only one. Still the only one. So, yeah, R3 is huge. Very, very big. All right, guys. That is it for me today. Pay attention to the economy here. I think the market's going to take a beating. The Fed, instead of propping up the stock market, is probably going to have to put money into the financial system, specifically into banks, to make sure that they do not start closing their doors day after day after day.
I'm going to be curious to see what happens October 11th.
Yeah, that's going to be interesting because, on October 10th, the current injection of liquidity in the overnight markets is going to end. And then, yeah.
Or is it? We'll see.
I wonder if they're going to just extend that or come up with some other idea to, inject liquidity into banks. But even XRP can't help the banks if they don't have the cash flow. And that's a big problem. That's a really big problem. Isham says, I bought the dip on XRP Tuesday, small bag, what I could afford on BitTrue,
nice.
Waiting for my Ledger X to arrive so I can transfer. Good.
Very nice.
Very good. Very good. I don't get price predictions on XRP because it's like, this is the first new asset class in digital asset. Digital assets are a brand new asset class. First one in 500 years.
Price doesn't matter until it's in the dollars and up above, and then I'll pay attention.
Yeah, you just never know. It's something that you just want to hold on to, especially at these prices.
Yep. This is crazy. You never come back to this area. Yeah, when it leaves here.
Yeah. Yeah. When it starts to move, this thing can move like crazy.
By the end of the year, Isham, manage your expectations.
Yeah. Yeah. I said that last year too. Didn't happen.
I'll hold this for 5 years, and if it happens sooner, hooray.
Yeah, that's my thing. I'm looking at 3 to 5 years out.
And that way, if it happens sooner, then it's a nice surprise.
Yep, exactly.
All right, guys, it's about a wrap for me too. I got to get ready for a 10 o'clock on rolling over here. So thanks for coming out again. Dave, thanks for all of your insight as always.
Yeah, my pleasure. Thank you, Dan, for hosting these. I mean, this is something for our clients, and you guys just make sure that, you take advantage of it, ask questions if you have. And, Dan and I are here basically just for you guys. So make sure you get in contact with us and we can answer any questions you have. Mike, you're welcome. Andrew, take care. I will get back to you on your text. And appreciate you guys. See you next Tuesday. Have a great weekend.
Absolutely. Stay warm over there. Watch out for the cold fronts.
Yes, you too. See you, guys.
Bye-bye.